thank you very much, Gilbert, for the introduction, and to the GCFF for hosting us today. Really appreciate everyone's time and attention this morning. So I did want to introduce you to Nickel 28 Capital Corp. As Gilbert mentioned, we are just in the process of changing our name from Conic Metals. And the purpose of that is to show investors that we really are focused on the nickel space. But we also have a significant portion of cobalt in our story as well. So first off, I am going to talk about many sort of forward-looking statements. So when you do have some time, please make sure that you read this page. And so when you think about Nickel 28, I want you to think about sort of three different buckets of assets that we have inside the company. The first and the flagship asset for our company is an 8.5% joint venture interest in Ramu, the nickel-cobalt operation in Papua New Guinea. This is a mine that has been operating since 2012. Our operator here is the Metallurgical Corporation of China, so MCC. And MCC put this mine into full production at a cost of $3 billion US. And again, we have an 8.56% interest in that joint venture today. So when you think about our portion of that CapEx, it's roughly equal to US $260 million. This is one of the lowest cost nickel mines in the world, and is just a world-class operation. And today it generates significant cash flow to help pay for those construction costs. The second bucket of assets is a royalty portfolio that we own on a number of properties in Canada, Australia, and Papua New Guinea, highlighted by the two royalties mentioned on this page. So first off, a 1.75% royalty on the Dumont Nickel Project in Quebec, and a 2% NSR royalty on the Turnagain Project in British Columbia. These are two of the world's largest undeveloped nickel sulfide operations, and we firmly believe they will be built in this nickel cycle, which Chris Berry mentioned is certainly coming. The third bucket of assets is a cash position, which provides more than enough cash to continue running the business before we start generating our own sort of substantial free cash flow from Ramu. So why is Ramu our flagship asset? We show it here on this page. MCC, as our partner, has done a tremendous job operating this mine. Ramu has operated above its capacity for 4 straight years, 4 years in a row. And we produce about 33,000 tons of nickel and 3,000 tons of cobalt on an annual basis. This is a mine that, based on reserves, has a 14-year mine life. And based on our resources, it's a 35-year mine life. So we believe this is going to be a mine for many decades. On the right chart here shows you our cost profile mixed with the nickel price. So our costs are about $2 per pound of nickel. That's net of our cobalt byproduct. And the nickel price today is $8 a pound. So you can see we are generating a substantial margin at Ramu today, and these are based on our quarterly results. We will be releasing our year-end results in a couple of months. So going forward, why should you be invested in Nickel 28? And this page really tells the whole story. There is a lot going on this page, so let me try and break it down. Starting next year, we believe we will start receiving 35% of our attributable cash flow. And so in 2022, using an $8 nickel price and a $20 cobalt price, so roughly today's pricing for both nickel and cobalt, we will generate about $25.7 million in cash flow. Of that $25.7 million, $9 million will start coming to Nickel 28. The other, call it $16.7 million will go to continue repaying a joint venture debt that we owe to MCC. So MCC provided all of our financing for our 8.56% interest. And as a result, we still are paying back MCC, but we are forecasting that we'll have repaid the first tranche of our debt by the end of this year, meaning next year we'll start getting 35% of our cash flow, and the other 65% will go to continue repaying debt. That repayment amount in the second tranche will take a couple of years to fully repay. And once repaid, our interest in the project goes up to 11.3% at no additional cost to Nickel 28. And what we're showing on the right chart here is the tremendous leverage that we have to nickel prices. So at a $10 nickel price, our cash flow goes from 25.7 to 39.3 million. And our 35% of that would be $13.7 million next year, which when we fully repay our debt and our interest goes up to 11.3%, we'll start generating over $50 million in free cash flow, which, and these are in US dollars, 50 million US in free cash flow. And this is why you should be invested in Nickel 28, because if you look at our market cap today is roughly $45 million US. And again, in a couple of years, we could be generating $50 million in cash flow, depending on your belief in the nickel price. So you can see here on the bottom left that our share price has performed exceptionally well over the last 6 months. And this is really in line with the increase in the nickel price, but also people realizing that we're very close to getting cash flow. And management, what you'll see on the bottom left of this page, management are 16% shareholders of this business. So we are very much aligned with our shareholders. So just to show our assets on a global map here, you see our royalty assets in Canada. Here's our Ramu asset in Papua New Guinea. Sorry. And some royalty assets that we also own in Australia. Our cost base for this portfolio was $130 million Canadian, and we're trading, and our market cap is a fraction of that today. So on Ramu, why do we like Ramu so much? It consistently ranks as one of the lowest cost nickel mines in the world. MCC, as I said, have done a tremendous job operating this asset. Our resource, I mentioned we have a 35-year mine life based on our resources. That is only on 15% of our exploration license. So there is tons and tons of exploration upside at this project. And as I also mentioned, when we repay our joint venture loan to MCC, our interest in this project automatically increases from 8.56 to 11.3%. And that is going to allow us to start paying significant dividends to our shareholders, and we can start buying back stock. And these are going to be transformational events for the company. If you're not familiar with Papua New Guinea, it's just a very resource-intensive country. The resource markets generally are a massive contributor to PNG's GDP. The Ramu mine specifically is located on the north coast of PNG. Slightly inland is the mine, connected via a 134-kilometer pipeline to our refinery that sits on the coast. So this is a fully integrated mine and refinery operation, and we produce a mixed hydroxide product at Ramu. MCC, I hope most of you are familiar with MCC. It's a subsidiary of China Minmetals, one of the world's largest companies, obviously. MCC is a construction and engineering firm which is working on over 2,000 projects worldwide at any point in time. Most of these, of course, in China, but MCC has built Asia's largest nickel mine, largest copper mine, PNG's only nickel project. This has been just they are a tremendous partner of ours. And we've been partnered for almost 2 decades with MCC in Papua New Guinea. This is our royalty portfolio. In the interest of time, I won't spend too much time on this. But Dumont, we did talk about, this is one of the world's largest undeveloped nickel sulfide projects. And this is a project that's fully permitted and construction ready. And we fully believe that this project will start to be built in the next couple of years. When it does get built, our revenue from this mine at today's commodity prices will be about $10 million US a year. So this will be, one day, this will be a $100 million asset for the company. It's got a 30-year mine life with significant upside to that. And Turnagain is very much the same. It's a little bit earlier stage, so it's just currently working on a feasibility study. But again, it's got a 30-year mine life, significant upside, and would generate about $8 million a year to nickel 28 once this project is up and running, which we are forecasting for the mid 2020. So sometime around 2026, 2027. We expect this mine to be built, and it's a very, very big mine in northern British Columbia. I saw Chris touched a little bit on the nickel and EV metal space. Why should you care about nickel? Because over the next decade, we're going from roughly 100,000 tons of nickel demand servicing electric vehicles today to over 1 million tons and upwards of 1.5 million tons in the next decade. Which at 1.5 million tons represents about 60% of the nickel market today. So a massive, massive increase we're forecasting. And I firmly believe people, so Chris Berry included, are underestimating how quickly this market will move towards electric vehicles. We have battery capacity that's being built around the world, primarily in China, which is leading to this massive increase in demand for nickel. And nickel projects, if you look at these HPAL facilities or these ferronickel assets that are being built around the world, these are multi-billion-dollar assets that take many, many years to not only construct, but also to ramp up. And so you need a much higher nickel price to incentivize this incremental nickel supply. And the analysis suggests that incentive price is around $11 per pound of nickel. And today we're only at 8 pounds. So in summary, before I take a couple of questions here, we've got substantial free cash flow that's going to be coming from Ramu. We will be increasing our stake in the project once we repay our joint venture loan to MCC, and that comes at no cost to us. And we see significant exploration upside at Ramu with tremendous leverage to nickel and cobalt prices and a valuation today that we still think is incredibly cheap. And you've got a management team that's running the business that is entirely aligned with our shareholders and firmly believe the price should be much higher. So with that, Gilbert, I thank you again all for your time and attention, and to GCFF for hosting. Happy to take any questions.
Thank you, Justin. Here we got a few one line up here. The first one coming from Sandy. He's asking, what's the big advantage or difference between a royalty or more ownership of Ramu?
So a royalty generally has no operating interest, no say in the way a project is run. and generally tend to be at the revenue level, so also aren't generally subject to the cost structure. So royalties are very beneficial, and you see many royalty companies. The royalty sector in North America is about a $60 billion sector, so it's very, very big. We inherited the joint venture interest in Ramu, which means we are subject to costs. We do sit on at all of our joint venture meetings, so we do meet several times a year with MCC. So it gives us a little bit more say over the way things are run at the project, although it is operated by MCC, who've done a tremendous job. So it's there's pros and cons. You also tend to see the joint venture interest being much bigger than a royalty. So as we have an 8.5% interest, where our royalties generally are 1 to 2% interest. So so just size-wise, the joint ventures tend to be much bigger.
Sure, good one. The next one coming from Bruce is asking about your track record of your team over there.
Yeah, so very good question. I myself have been in the royalty and streaming and financing business for about 15 years. I started my career as an investment banker in Vancouver, did that for 10 years, and then I joined a company called Sandstorm Gold. I was one of Sandstorm's first employees, and today they are one of the largest precious metal royalty and streaming companies. And I left there about 5 years ago, launched a company called Cobalt 27, and raised about $1 billion of financing over a year and a half to build a cobalt and nickel company. And we sold some of those assets about a year and a half ago and spun it out into Nickel 28. My partner, Anthony Maluski's been been in the investment industry himself for about 15 or 20 years, started out as a lawyer, and like me, has significant experience running and investing in these mining companies.
Great. I'll give you enough time to ask the last one here. A couple of audience have a question about your debt here. Is there any opportunity to accelerate the repayment of the debt to accelerate the increase in your interest? So what's your thoughts on the debt repayment?
That is a very good question. So yes, following the payment of our first tranche, we do have the ability to accelerate those debt repayments at any time. And absolutely, you would choose to do that. You will never wait to organically pay off the debt. You will accelerate it at some point in time. I believe that decision is 2 to 3 years away, depending on commodity prices. But you do have the option, and certainly we'll be exploring our options to accelerate that debt.
Okay, thank you for your answers here today, Justin.
No problem. Thank you very much for your time and attention again.